What is diversification? We're going to answer this question specifically through the lens of not just diversifying into public market investments, but also private market alternative investments. Hi, everybody. I'm John Bowens, Director of Education and Investor Success here at Equity Trust in the Equity Trust Virtual Classroom. This is another one of our sessions. Make sure to subscribe and hit the little bell icon. That way we can alert you to all of our upcoming video content. All right, let's jump in here. What is diversification? Well, I'm going to read you the definition directly from the FINRA website. This is the Financial Industry Regulatory Authority's website, and they say asset allocation, diversification, is the equivalent of deciding how many of your eggs you're going to put into how many different baskets or asset classes. Diversification is the spreading of your investments both among and within different asset classes. And rebalancing means making regular adjustments to ensure you're still hitting your target allocation over time. All are important tools to managing investment risk. Now, I'm going to emphasize investment risk. See, the risks associated with your investments are through your own lens. Now, you might be looking to a financial advisor or other wealth management consultant for a diversified portfolio, or maybe you're someone that wants to self-direct your own retirement funds. Here at Equity Trust Company, many of our clients are taking control of their retirement savings accounts, and they're self-directing into not just public market investments, but also private market investments. So keep in mind that diversification can mean different things to different individuals, and most importantly, diversification can mean different things to different financial institutions. For example, most financial institutions only have the pipes and plumbing and capabilities to allow you to diversify into traditional public market investments. A lot of times you're going to hear this concept of the 60-40 model. That is 60% public equities and 40% fixed income securities. So those would all be public market investments. And so many financial institutions, they can only offer the financial products that are within that particular scope. That is a portfolio of public market investments. Well, what if you're someone that has experience investing in real estate, private equity, cryptocurrency, physical gold and silver, private direct company investments, or other what are referred to as alternative investments? And let's say that you have an IRA or 401k or Roth IRA or other retirement account, and you don't want all of your money 100% focused on the public markets. Well, there's an account that we call a self-directed IRA. And rather, it's not necessarily an account, it's an industry term. Self-directed, meaning you can self-direct into various alternative investments. And that's exactly what we do here at Equity Trust. So envision you having the ability to be your own portfolio manager. You have the ability to say, I want to invest in public market investments, and then I also want to invest in private market investments, assets like single-family rental properties, fix and flip real estate transactions, private equity, hedge funds, physical gold and silver, cryptocurrency. And you're going to learn that you're really only limited by your own creativity in terms of what types of private market investments you select. So in terms of diversification, you're going to learn that with a self-directed retirement account, you have the ability to diversify across a broad spectrum of alternative investments and public market investments. Here at Equity Trust Company, oftentimes you're going to hear us refer to this as the universal IRA, the ability to be able to invest in both public and private market investments. Now, why have investors for years focused on investing in private market investments in addition to public market investments? Well, it all comes down to how private market investments can behave and how they can correspond in an overall portfolio. In some cases, there's very little to no correlation of alternative investments to public market investments. And that behavior can be very, very critical from an investment risk perspective. Now, I'm going to read, this is directly from a press release from the United States Senate Committee on Banking, Housing, and Urban Affairs. And in 2022, they went to a Georgetown study, and I'm referencing this Georgetown study you can see here. And it says, I quote, pension plans have consistently outperformed 401k plans because they diversify across the full range of asset classes, putting one of every $5 in alternative asset classes like private equity. A recent Georgetown study estimated that 401k plans diversified with a modest allocation to alternative asset classes, private equity, hedge funds, and real estate are specifically mentioned there. They would increase American workers' retirement savings by 17% per year and reduce losses in a downturn. Now, here at Equity Trust, as a self-directed retirement account custodian, we can't tell you specifically what allocation you should make into private market investments. What we do here is provide education and information, and ultimately the support mechanisms to enable you to take full control of your retirement savings accounts and invest in not just public market investments, but again, also invest in private market investments like real estate, as mentioned, single-family rental properties, fix and flip transactions, even cryptocurrency or physical gold and silver. So ultimately, what I'd encourage you to do is really think cerebrally about how should I allocate my retirement portfolio? And maybe you have multiple retirement accounts. How do you determine which account types you want to allocate into private market investments? Or do you maybe not want to invest in private market investments at all? See, that's the beauty of this. You get to be in full control and make all of your own decisions. So we have a webinar. You can look in the description and you can click the link. We have a webinar that dives deeper into this that's referred to as Your IRA Truly Diversified. In fact, in that webinar, you're going to see where I do a demonstration of how, in a turnkey fashion, you can utilize our Wealth Bridge system to invest in a very turnkey way into private market investments. So maybe you're thinking, wait a second, John, I don't have any experience investing in real estate or private equity, or I don't know how to identify these types of opportunities. Well, the good news is here at Equity Trust, we have a system, again, called Wealth Bridge that can enable you to, in a turnkey fashion, browse various private market investments. You do all of your own due diligence in examining those opportunities and if they're suitable for your portfolio, and then you can make the conscious decision to move forward. I hope you enjoyed today's session. Until the next one, keep leveraging compounding interest in the absence of taxation.